Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Jeannette Lowe. Jeannette is a managing director and Washington research analyst at Strategas. Jeannette, how are you doing today?
I'm doing well, Ross. How are you?
I'm good. I'm doing well. I feel very fortuitous to be talking to you today. Obviously, a big election this week, a lot of policy implications to unpack. I want to start with the market's reaction. Obviously, there was a big move in certain sectors, a big move in yields. I wondered, what you think about that over the near term, and if there's any long-term impacts that you're seeing from the election on markets.
Yeah, absolutely. So I think one of the things that was really interesting about this election cycle is that it was projected to be a close election. It ended up being not a close election. But what you had seen was the market had been pricing in a Trump win. Then the market kind of pulled back a little bit. It was pricing in more of a 55 percent odds of Trump winning. And so then once we actually found the election result, you did see a big move in a large pieces of the market because this has been such an investable election. One of the reasons for that is that there's been vast policy differences between former President Trump and Vice President Harris, particularly with regard to trade policy, with regard to foreign policy, with regard to regulation, immigration, and then taxes and spending. And it's important because one of the things that's really key in this election is that the differences, particularly with trade and immigration and deregulation and foreign policy, the president can act by themselves. They actually don't need Congress to enact many of those policy provisions, maybe a little bit on immigration, but in general, all those are things that the president has their own authority for, and they can make moves, which then impacts various investments in various sectors. We also saw a big move in yields, which I think is a number of factors, thinking about Trump imposing tariffs, seeing higher inflation, and then also higher deficits. I think one of the things is that while we don't necessarily know the exact results of the election, we do know that the former president won a second term. We do know that the Republicans have taken over the Senate. And it does now actually appear likely that the Republicans might keep control of the House, but by a very small margin, let's say maybe 1 to 2 seats. So that also had an impact on the market as well, because if the Republicans do have complete control, that means that the Republican Party can implement as much fiscal legislation as they are able to pass. And that also put a bid in yields higher as well. One thing we would caution, though, is we still have the debt ceiling looming on January 1st. So the US is going to hit the debt ceiling. And then at that time, the US can no longer issue net new debt. And so instead, the Treasury will pay US bills out of the Treasury General account, which is an account that's outside the banking sector. And that's actually going to provide a lot of liquidity as that money then comes into the banking sector. So that actually should make yields fall once we get into next year. And that would be a bit of a change from what we're seeing in the market right now.
Yeah, and obviously that big move in yields had kind of started ahead of the election as economic growth had re-rated higher, as some of those inflation concerns had come back into the fold. But obviously, both of those being ramped up to a new degree with the potential for a Republican sweep. You mentioned the debt ceiling. That was slated to be a big debate next year, maybe less so now. I'm curious. What are the other big policy implications of a potential Republican sweep versus maybe mixed Congress that had been a lot of people's base case heading into the election? Where do you see the biggest change or the biggest swing in what might occur over the next several years?
Right. And so this is important because, again, the Democrats had a chance to take over the House, and they still could actually do so. But just based on the races that are outstanding, we do think Republicans will actually hold the House. But that makes a difference so that if Trump is trying to get his fiscal agenda through, that is going to matter whether or not he has complete control or whether he has divided government. Democrats in control of the House would require different changes to, say, the tax bill that is going to be debated next year, to maybe opposing certain spending cuts that the president might be looking to implement next year, particularly related to the debt ceiling debate. So one of the things that would be different as well is that we're talking about a tax bill next year. A tax bill is going to happen regardless, because otherwise we would see a $400 billion tax increase going into effect. So Congress will take action. If there's a Republican sweep, they will look to move legislation on their own. This is through a budget reconciliation process. It's actually how the 2017 tax bill, which has the provisions expiring, how that was actually passed in 2017. So they'd be looking to do that again. They'd be looking to move it potentially earlier in the year, so maybe getting it done in the first half of the year. But if we had divided government, that would require more compromise. Republicans and Democrats would actually have to agree on which policies or which tax cuts would be extended. Could there be any tax increase offsets, such as an increase in the corporate tax rate or things of that nature? And then for how long those taxes would actually be extended. That would have put also the debate more towards the second half of next year rather than the first half. So that's going to be important. Also, the debt ceiling will also be different, because if the Democrats had been in control, if there had been divided government, that would have meant that there, again, would have had to been more compromise over whether or not spending cuts get tied to the debt ceiling. With Republicans in control, it can make it a little bit easier for the debt ceiling to get lifted overall, and there may have to be a little bit less compromise. Republicans may be able to just push some spending cuts to go with it, and then that moves through to the Senate. So it does create a different environment. It does allow the president, particularly on taxes, to move as much as he would like, since that will be the biggest issue next year. But then obviously it does allow for some other things, some other changes on other issues as well.
Yeah, obviously the tax issue and the debt ceiling front and center in 2025, but over the course of the presidency, things like trade and tariff policy, immigration, big things to keep an eye on. We're lucky to have the Strategas policy team under the Baird umbrella. So Jeannette, thank you so much for the time today. We'll be sure to follow up with you again soon to get more information.
Awesome. Thank you, Ross.
Thank you.